Good morning, trading world. It is September 1st, 2022, just after 8 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. All right, it's the first of the month. Get up, get up, get up. I don't know if y'all familiar with Bone Thugs and Harmony, but that used to be a really good song. But seems like the dip buyers are probably saying pull up, pull up, pull up to the market this morning. But yesterday I talked about getting a last ditch effort toward 394 on the SPY. Because I had to leave out early yesterday, I left a few orders to fill when we hit certain levels. And while I was traveling, once it got near the close, I just happened to be in an area where there was no signal and I couldn't check anything. I couldn't log in to adjust the orders or even see if they had filled for some reason. But since they didn't feel just as well, because it looks like we got some news from China, some supply chain issues. I guess they're locking something down again that kind of helped us get to that 394 we were looking for yesterday in the after hours. This gives us a chance to hopefully get in a better price than we would have yesterday, potentially. I am looking for an explosive move up into Friday. Usually the new fund flows show effects of lasting 3 days. However, with the weakness in the market, I wouldn't be surprised if the effects only lasted 2 days. So same plan as yesterday, buying bull put spreads, but instead of closing them out completely, I will only buy back the short leg, leaving the long put on for the coming reversal. Be aware of jobs data coming out at 8:30 a.m. this morning, which could be a market mover. Let me bring up the key levels to watch for today. All right, here we are back with the key levels of the day, starting on the resistance side. We have our jack resistance at the 392 to the 393 level. Then we have our queen resistance at the 394 to the 396 level. Then we have our king resistance 397 to the 401 level. On the support side, we have our jack support at 391 to the 390 area, which may be pretty prominent today. Pretty hard to get through that, so I'm looking at that as a base of support. But then we have our queen support level at 389 to the 388 area, and then our king support 387 to the 385 area. The main thesis for today is bullish, closing above the 395.18 with a projected target high of between 396 and 401. The alternate thesis is bearish, closing below the 395.18 with a projected target low of between 393 and 386. All week I've been saying be aware of the alternate, more explosive thesis. Well, today I'm just saying be aware of explosiveness. Whether it's the bullish, the main thesis, not so much today, but definitely tomorrow, could be a real explosive day. Today is going to be explosive between levels because we could have these sudden drops, sudden rallies, but it's going to be kind of contained, if that makes sense. Let's see here. The current major channel we're in is 397 all the way down to 379. The major channel above is 397 up to 416. Remember the pattern I called for. It's kind of like a diver jumping into a pool. First you go to the pool, dip a toe in or splash a little water on you to feel the temp. Then you go back a distance trying to psych yourself out about the temperature, and you just run and just all of a sudden jump in. The SPY is doing the same thing right now. It dipped a toe in the major level below, kind of didn't like the temp, but later on it's going to run back a distance and get a running start and just take a big jump, or it's going to say the heck with it, just take a big jump in and take that big plunge. And the big plunge in this scenario is probably going to be one of the biggest gap down days that we've seen in recent times. So with that, let's get to the scenarios of the day. Alright, our first scenario, and most probable, is going to be our expansive range day structure. We could look to chop low, then higher low, then higher, repeating this process throughout the day. Be careful because I do expect either a fade going into the close or after hours. So be aware of that. But that is our expansive range day structure. Alright, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either our queen or king resistance before spending the same energy we use going up to come back down the second half of the day. So again, this is our rounded reversal day type structure. We often have a vice versa alert on our rounded reversal day type structure, and that vice versa alert would look like this. If news in the jobless claims or the couple reports that we have coming out kind of gives us a opposite reaction, or very high or very low, which could change our launch angle at the cash open, we could actually look to do this, where instead of continuing higher, we could actually continue lower, coming in after the cash open, and we will find our midday chop either around our queen or king support area. And then the second half of the day, we would look to go back up with the same amount of force that we came down with the first part of the day. So that's the vice versa alert on the rounded reversal day type structure. Alright, our last scenario is going to be our trend day up day structure. In order for this to happen, we're going to need a little help from the reports that are being released: jobless claims, productivity and costs, PMI, all of that just before the open or just after the open, giving us that boost up to get above the previous close represented by the blue line. And so at that point, we start with a gap. Excuse me. We start with a gap up and fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin our uptrend for the day, better known as our golden window, the best time to trade. We find our midday chop around either the queen or king resistance area, and then a lot of the times we get a head fake looking to continue the main trend from the morning, but then at some point we get a fade back down going in or near the close. Today, because of where we're starting and because of how weak the market is, we have a vice versa alert on the trend day structure as well, meaning we could start gap down and we could have already such a large gap down that it would make it kind of hard for us to get to that point of breaking through the previous close. And that would look like this, where we would start gap down, and because we could have such a large potential gap down, it could feel like a very unusual day because it would take us a long time trying to get back up to test the previous close represented by the blue line. So we would have an unusually long what would feel like a rally as we go back and try to test that previous close, and we would spend a lot of time up here around that previous close chopping sideways before we turn back over and reverse back down. And again, this is going to be an abnormally long trend day down, where we go down and we could find it wouldn't be quite midday chop, but it would happen later on in the day where we get a start to find some kind of sideways chop movement at either the queen or most likely the queen support area, and then we would start to what looks like build another rally or some buy side activity, short covering going into the close that would lead us up. So that's the vice versa alert on our trend day structure. As always, I like to point out that your most important job as a trader is protecting the capital that you already have, and we do that by knowing and understanding the risk that we put on with each position and managing that according to our account size. With that, I hope this helps, and as always, wishing you a positive trading day. Have a great one.